I am Dion Rabouin, and this is Before and After, powered by Refinitiv. This will be the final episode of Before and After for 2019, and with all due respect to J. Paul Getty, we are not going to allow our nostalgia to lead to idle speculation, but rather use this episode as an opportunity to look back at assumptions about the markets that reveal themselves as inconsequential, and therefore, a missed opportunity. As we close out the year with markets near all-time highs, it's easy to recall the calamity of December 2018 and how certain the prospect of a recession seemed. Giving into these assumptions, many may have missed out on a stellar year of market gains. Look at the VIX at the close of 2018. The VIX started last December elevating into the high teens. Then a double-digit sell-off of the S&P happens with extreme velocity, and the VIX springs to 36 as Christmas arrives. 1 year later, we've learned a lot. For example, we've learned that the unknown effects of the trade war were not as severe as many thought. In fact, the reconciliation of the trade war has become seemingly irrelevant, as the effects have been broadly marginalized from market standpoints. The US economy, seemingly in that just right Goldilocks territory, does not appear negatively affected by the trade tensions either. Consider that recent jobs numbers are the best in years, and US homebuilder sentiment is at the highest since 1999. All this as the US was supposed to be collapsing into recession. Looking at the past decade, one that started in an economic abyss, stocks have risen and just keep rising. As we approach the new year, we are coming to the end of the best performing decade since the 1950s from a risk-adjusted perspective. The S&P 500 had a Sharpe ratio above 1 for the 2010s and returned a ridiculous 249%, or 1.2 times average. Now, we did endure 6 corrections of more than 10%, and all of them felt like the big reversal. But it never reached 20% on a close-to-close basis, and amounts to the longest bull market in history. Some individual stock returns were insane. If at the start of the great financial crisis, you looked at Netflix and thought, that's a good buy, hey, congratulations on realizing a 3,473% return, an S&P best this decade. That said, this rally has not been universally beloved, and the disconnect between economic expectation and the market has never been wider. There's still 2 weeks left in which it could all come undone, or maybe a new year and decade will inspire cautiousness. 2019 was a year where the risk on spirit was spread all over the globe, so maybe 2020 will be a return to varied returns in different asset classes. We should look at some key market movers of the fourth quarter and anticipate what the close of 2019 and the start of 2020 could mean. We are not saying that it is an apples to apples comparison, but the NASDAQ in the late 90s was on fire, and there was a lot of late money chasing stock returns. From 97 to 99, the NASDAQ almost tripled, an almost unprecedented parabolic move for a US index. So it is worth looking at how 2000 played out, because those that are old enough remember the NASDAQ blow-up of the early 2000s. It wasn't an instant deflation. From the close of 99 through March of 2000, there was an additional 25% gain in Q1, climbing from 4,069 to a shade above 5,000. So we should not expect an instant reversal on New Year's Day. The reality is, Q1 2020 may have some extreme upside action before a violent reversal, and as in 2000, is the tech sector that's catching the chase trade bid, semiconductors in particular. The SOX is setting new highs. It is up 90% in 2019 and 19% in Q4. We have to determine how much longer and how much higher this sector can run, or if 2020 will be the year the cyclical nature of the sector becomes apparent. Looking at the SMH ETF and applying a similar pattern as 1999, the ETF could shoot up to 170 before falling and falling fast. The 38% retracement from the 170 level could see the SMH back under 110. So there you have it. Nostalgia-fueled, non-idle speculation in a sector full of opportunities. Because as Patton said, prepare for the unknown by studying how others in the past have coped with the unforeseeable and the unpredictable. Yes, he was talking about invasion, but it is just as applicable to investing. Brexit, to US jobs, to the German manufacturing conundrum, to the US-China trade war. Onward into 2020, before and after, powered by Refinitiv, we'll continue to look forward to the events that will hone the edges and mitigate the swings. Happy holidays, and we'll see you in the new year.